Are we live? Let me see. Oh, awesome. I'm live. Okay. Sorry about that, guys. Let me see here. I think I'm live. It looks like I've been live for 2 minutes. And I apologize for the noise in the background. They're doing construction, repairing stuff here at the office, and a lot of noise. So, what's today? Wednesday. Happy Wednesday. Um, as per a suggestion by one of my colleagues, they said you should hop on just social media and just kind of talk just different investment stuff. And so I'm gonna try to start doing that with a little more regularity. I think a lot of you guys could use some of this guidance and some of this advice. So if I can help you to some capacity, at least get you a little bit of guidance on maybe some things that you could do, then more power to you. So a few things. The biggest question that I get from clients and different people that I talk to is, "Hey, man, I want to get into the stock market. I don't know where to begin. I don't know what to buy. I don't know anything. And so, can you educate me? Tell me what I need to buy to get rich." And dude, if it were only that easy, I wouldn't be doing a social media video in San Benito, Texas, on on a Wednesday afternoon. If it were only that easy. But there's a couple of things that I can share with you guys that I think would be beneficial. Some things that I think you guys could benefit from, and maybe for you guys to go and just kind of do some of your own research. Now, I am a financial advisor. I am a licensed financial advisor. In this video, I am not your financial advisor, and so anything that I say, just take it with a grain of salt. So let's talk about some stocks and maybe some things that you can look into. Well, for starters, if you want to get into the stock market, there's two different ways that you can do this. Number one is you can get in the stock market by buying individual stocks. So, like, let's say you wanted to go buy Apple stock, or you wanted to go buy Google or Amazon. You can very much do this. Like, if you want to buy any stock, you could do that through any broker. What's a broker? A broker is just a platform that you utilize to buy stocks. I'll give you some of the more popular ones. Fidelity is a broker. Robinhood is a broker. TD Ameritrade, Charles Schwab, all of those guys are brokers. You can create a free account without having to pay any money to anyone, and you can go in and buy and invest in stocks. Anybody can do this. So that's not really the hard part, because you really, like, if you go to Google right now and I like Robinhood because I feel like it's the easiest. Like, their app is real easy to use and it's just a real easy platform. So, like, you could literally type Robinhood on Google. It's got to pop up. You go and you create an account. This is a financial account. It would be the equivalent of you opening an account with Wells Fargo, same thing. You're opening an account with a financial institution. They're going to ask you very specific questions. They're going to ask you for a social security number. They're going to ask you a lot of stuff. So you just got to be willing to disclose that information. But once you pick the broker, and I'm just saying Robinhood because I feel like it's the easiest, then the next thing you have to do is you have to link the broker with your bank account. So like I use Wells Fargo for pretty much everything. So then I link my Robinhood account to my Wells Fargo. They're both connected. So now I can transfer money from my Wells Fargo account into my Robinhood account. You guys are with me so far. This is if you want to buy stocks. I'm just kind of giving you some of the basic mechanics of what you need to do initially. So that's number one. After you do that, let's say you transfer $1,000. The hard part is, well, what the hell do you buy? And so this is where you're left with the option of buying individual stocks. Once again, you can buy Microsoft, Apple, you can buy whatever company you want. You can buy like smaller companies that have a lot more risk. I don't know. Let's say like a NIO. A NIO is a Chinese electric vehicle company, and there's just so many different types of companies. My suggestion, the two suggestions that I would have for you, if you want to get into the stock market, is you need to buy an index and you need to dollar cost average into that index. So what do I mean by that? Okay, well, let's dissect what an index actually is. An index is a group of companies, a group of stocks put together in one stock. That's what an index is. The granddaddy of all indexes is the S&P 500. The S&P 500 are the 500 biggest companies in the United States. So if you go buy a stock or a share in an S&P 500 ETF, for simplicity, you just buy a share in the S&P 500 on Robinhood. You just type in SPY, S as in Sam, P as in Paul, Y as in yams, SPY. You will be able to buy shares in the S&P 500. The S&P 500 is composed of the 500 biggest companies in the United States. And so through your Robinhood, through your Fidelity, through your TD Ameritrade, through any of those platforms, you can go and buy into the S&P 500, which is an index. Why is this important when you're trying to get into stocks? Well, in that sense, those 500 companies are the biggest. And if one of those companies doesn't perform, it gets removed from that index and it gets replaced with another company. Why is it better to buy into an index initially than buying individual companies? Well, because when you buy individual companies, when you buy individual stocks, like let's say you want to go and buy Tesla, and nothing against Tesla, like I'll tell you Tesla's a great company, and we'll talk about Tesla in a different video. Or maybe you want to go and buy NVIDIA. NVIDIA has been this chip manufacturing company that has just been going bonkers. Like it's just got up so much in value. You want to go buy one of those companies, there could be something that could drastically trigger the price of that company. Maybe they make some bad financial decisions and they go bankrupt. You lose all your money. Maybe they change CEOs and the new CEO isn't as good as the previous one, and the value of the company goes down. See, there's a lot more individual components that can affect the value of one stock versus you buying into an index, which is composed by many different companies, and therefore, by buying into the index, you are 30 companies, however many companies are inside of that index, which is why my recommendation initially for anyone that wants to buy into the stock market is you would probably want to buy into an index. So that's recommendation number one. Recommendation number two is assuming that you only have $1,000 to invest, like that's all you have, you probably want to dollar cost average into the index. What do I mean by dollar cost averaging? It means if you have $1,000 and that's all you have to invest, then you need to set some parameters where you say, well, I'm going to invest in the S&P 500 $100 a month for the next 12 months or for the next 10 months until my full $1,000 is invested. That's called dollar cost averaging. Why is that important? Well, because the S&P 500 might be here today It might be here tomorrow. We could go into a recession and it may be way lower in 3 or 4 months. So by buying a little bit of the S&P 500 every single month, you're able to get better average pricing, and then you just hold on to that for the next 5 years. And the S&P 500 tends to trend up with time. So as long as you hold, remember, investments are intended to be long term. Speculative investments, which I'll tell you about the speculative investment that I did last week, that lost me a substantial amount of money, which I will recover from it, but it's going to take me a little while. Speculative investments are designed to make you rich. That's when you YOLO and you say, I'm going to put $3,000 into XRP or one of those cryptos, right? And you're just kind of hoping that, you hit it and you win big. And then if you lose all your money, you lose all your money. Well, that's speculative. You're speculating that potential investment will work out well for you. Investing is saying, let me find something of value. Let me put money into it, small bits and pieces at a time. Let me hold on to this long term for the next 3 years, the next 5 years, the next 10 years. Because it does actually have value, it will go up with time. And this is something that I'll be able to monetize. If you have a 401k, you're invested in the stock market. Any type of retirement account through your employer, you're more than likely having some sort of stock market exposure. You already have that there. This is you saying, I have some cash money sitting on the side. I want to utilize this cash money to go and buy stocks, me directly. I want to buy the stocks. Well, you need a broker. I told you Robinhood's a good one. Fidelity, TD Ameritrade, all those guys, you can create free accounts. You need to link your broker to your bank account. You need to transfer the money. And then you need to go and hand select the stocks that you want to purchase. And there's just so many options. So my intent here is to kind of give you like just basic guidance. We'll talk about retirement planning. We'll talk about different types of retirement accounts. We'll talk about traditional IRAs, 401ks, TSPs, 403bs, Roth IRAs, pension plans, 403bs, like whatever it is that you guys want to talk about. I know. So we'll talk about that. We can talk about crypto. We can talk about Bitcoin, Ethereum, Cardano, XRP. We can talk about permanent life insurance policies, term life insurance policies. We can talk about doing promissory notes. We can talk about investing in real estate. We can talk about flipping real estate. We can talk about trading algorithms and trading bots, which that's the one that kicked me in the face last week, but that's okay. It's a learning lesson, and I will recoup. Because I don't make mistakes without getting better. Anytime that I make a mistake, I get drastically better. So all of this stuff needs to be taken into consideration. And ultimately, when you're trying to invest money, the two biggest things that you want to consider as far as your mentality is, number one, how much risk am I willing to take? And number two, how much money am I willing to lose? Like both of those things are extremely important because you never, ever, ever go all in on any one thing, because if that one thing doesn't pan out and you lose all of your capital, you don't have any money to recoup. You don't have any more bullets in the gun to say, okay, well now what, right? I lost XYZ. How do I get it back? Well, the only way you're going to be able to get that back is by having more ammunition. But if you blew all of your ammo in the first thing that you did, you'll never want to invest again. And that happens very commonly. There's a lot of people that go all in on one thing, they lose all their money, and they just never go back. Why? Because the impact that something like that can have on you is very detrimental. So just understand that investing is not easy. If investing was easy, everybody would be rich. So we have to understand that. Number two, everything has to be done with intent. I see so many people just buying into a stock because they saw it on Facebook or their friend told them that they were going to buy the stock because they heard that, it's going to create this great vaccine and just a bunch of crap. I want you to understand one thing. As it pertains to stocks, everything that is publicly known about that particular stock today, like I'll use Tesla as an example. Everything that is to be known about Tesla today, the stock market already knows. There's people that invest in the stock market that have way more money and way more resources than any of us. Anything that is to be known about Tesla or any stock today is already known. There's nothing that you know that they don't know. There's nothing that you know that's going to impact the price that the market doesn't already know. So don't use that as your decision making to invest in a stock or a company, because the market already knows. The market already knows. So you can't use that. You can't use that as a gauge. So then all you have to do is ask yourself, if I want to buy this type of stock or if I want to buy this company, do I think that the value of this company is going to grow over the course of the next 5 years. We look at electric vehicles. Do you guys still feel like electric vehicles have a lot of growth? I think so. I think we're just kind of scratching the surface with electric vehicles, but it could be 3 years, it could be 5 years, it could be 10 years before they really take off. So you have to be mindful of that. And you have to say, well, the whole goal of me investing is I want to buy at this certain price, $15, $20, $30 a share, and I want to hold on to the stock until it's selling for $100 or $150 a share. Then you sell it, you realize your profits, you take that money, you go invest it somewhere else. Understand that everything has to be done with intent. Understand that you, $1,000 and an app is not going to make you a millionaire. All that's going to happen is you're going to lose your $1,000. So don't do that. People like me, I do invest money for people. And most of the time, investments that I do for clients are not risky. Sometimes I'll put together investor groups and we will take more risk. And sometimes that pans out real well. Sometimes that goes to shit real quick. But that's just part of the risk. It's part of the risk. And like everything else, no risk, no reward. There's a saying, what is it? Fortune favors the bold. And sometimes you have to get real ballsy if you want to make some serious money. And sometimes getting real ballsy kicks you in the teeth. And then you have to take a step back, regroup, and determine what your next plan of action is. So we'll talk about that. I do take emails. If you guys have any questions, you can always shoot me an email. I stay pretty busy, guys, so I don't have a lot of free time. But if I can help you some way, somehow, let me know. If you want to shoot me a text message, just let me know who you are, because you don't let me know who you are, I'm not going to answer. If there's anything that I can do to help you, ultimately, I want everybody to win. I want to share my mistakes. I have made my fair share of mistakes. Definitely, I don't want that to happen to you. So I hope that you guys enjoy these talks. I am going to try to bring them to you with more regularity. And you guys enjoy the rest of your day. Watch this video as many times as you need to. And if there's anything that I can do to help you, shoot me an email. Talk with you guys soon. Thank you.